U.S. stocks are wrapping up a third year of gains, and Wall Street sees more in the year ahead. But with little clarity around President Donald Trump's economic agenda for the new year, the upside might only be limited. Much like last year's, investors are rotating into small caps and less loved parts of the market, betting that 2026 finally brings earnings growth beyond the few tech names that have driven gains recently. That optimism is partly tied to President Trump's sweeping tax bill, with key provisions coming into effect in the new year. But with stocks near a record here again, some investors worry that the good news might already be priced in. And there are several wildcards that could disrupt the bullish narrative on stocks. First, the Supreme Court decision on tariffs. If levies are struck down, economists expect the president to reach for alternative measures, but even a short period of uncertainty could rattle markets again. Second, the next Federal Reserve chair. The president wants lower interest rates, but a nominee who's seen as politically motivated, such as White House economic advisor Kevin Hassett, could rattle bond markets, curbing risk appetite as a result. And then there are the midterms, which are historically turbulent periods for the stock market and tend to produce the weakest returns of any presidential cycle. For now, Washington is still nudging markets higher, supported by optimism around AI, but uncertainty around trade, the Fed, and election continues to cast a long shadow over U.S. stocks.